Hello, today is the 3rd of May 2011, and welcome to today's Silver Log. And it was a bloodbath over the last couple days, losing almost 20% in almost 48 hours since the open last Sunday night, or just less than 48 hours ago as I'm recording this. Actually, more as I'm recording this. However, when I made this bottom, it was less than 48 hours. A move from 49 to 41. Even 40 and change for that matter. Why did this happen? Well, there's many different reasons. Obviously, something big came in where a lot of silver was sold to people asking for cheaper prices. A lot of people getting stopped out, and I think a lot of people playing leverage are getting really hurt right now. It's a volatile game and a very dangerous game at that. And it's interesting because as I'm looking at the movements over this time frame, I'm thinking of a WWE announcer named Jim Ross, who said on many big matches that was going to be not for the weak at heart. He'd say this is going to be a slobber knocker, not for the weak at heart, and this is the exact same thing. It's unfortunate that I can't find many investments that are not for the weak at heart. Gold probably being the safest one, and the treasury bonds, when you're getting 3% interest with higher inflation, that's not safe whatsoever. And the WWE, that's all scripted, that's all written in advance, it's all fake. But what's the difference here? Is this all scripted? Is this fake? I'm kind of wondering this right now. And I say to myself, is it real or is it fake that silver is at $41? Is its true value 41? Is its true value versus other assets its price divided by its asset, or its asset divided by its price? That's a good question to ask yourself when you look back at people working all day for a few grams of silver and then seeing how a gram of silver today is a little over $1. Kind of interesting. And then the whole scripted, is the move down scripted in some way? And is there any profiteering on that? I don't know. If you did know in advance when you're up here that it's going lower, then it'll be a little easier to get in on some short positions, some double shorts, heck, even some option puts that are worth 30-40 cents, but because of a big move would be worth $3-4 or $2, that of many 100% gains. Just saying. I don't know, but it would definitely be possible. Now, within the technical analysis is concerned, it's in a downtrend. 5-day moving average is declining. Intermediate term bear market. It did come across this level here. It had a chance to bring it higher. It was neutral in the sense that it was its first test after a big move lower. It had a big move higher. Therefore, it found resistance. It's now an intermediate term bear market. This Fibonacci line, they oftentimes can work themselves in within key points, which means most likely it can go lower. It's at a nice point of resistance now, but it could very easily move in between this point, which would even be better. Same thing here. If this line moves to hit these pivot points, that would make sense. A move to 39 is most likely possible, but probable for that matter. And I'll get into that when I look at the daily chart. Now, as far as failed moves creating fast moves, I was stating this was a confirmation for a break higher, probably up to the 53 level, and that did not happen. Oftentimes, a failed move creates a fast move. So the failure to have this massive move they didn't do it. So that would have been very huge to happen. So it had an equivalency fast move, and that to me seems as that's the case. Whenever you have a failed move, the size of the failed move should bring you the size of the fast move, and in this case, was it ever? The downtrend, of course, is lower. It's now well above this downtrend, and when that happens, you can draw out smaller downtrends. That means the rate of descent is getting faster. And if we break this trend line in here, that means we would have an even higher rate of descent. We'd have to break it on the support level. We tried to in here, but didn't. But maybe it can come down, break it, and we can even build another fast one below. Man, Stephen King can't write stories this good. But maybe it'll happen, and I say that because the reason for the selling was because of the death of Osama bin Laden. That's the pure reason. On a sarcastic level, we see it go down so big. I have to say sarcastic just in case there's a few people who think I'm serious about this, because obviously I'm not. I'm definitely serious about this market having it being a horror ride, to say the least, as far as what you're seeing going on the bankers and really within the whole currency system in general, which is the reason why I like the physical silver to begin with. Now, if we move this on now to the volatility, it's starting to get fairly impressive. I think there's a possibility, a probability where we can neutralize within this 3, 5, 6% later on, as we're only seeing the start of this roller coaster ride, in my opinion. We're only getting started, and I think out of the next 20 or so days that have 10+% movements, a good 14, 13, 14 of them will be down, but within the uptrend. Now, as far as this daily chart is concerned, I want to start off with higher lows and higher highs. This is a higher low, and this is a higher low. I'm defining a low as an area after it had some sort of significant correction, either through time and or price. This is the one of the ands. It goes down through time and slightly through price, but it still is that of a correction. This one here, definitely a correction. And here, this isn't big enough. And finally, the bottom was in here. Maybe in here. Either way, it's the same size, pretty much. But it did consolidate enough through time at the point when it was lifting off in here that it wasn't yet enough of a correction, although it did make a double bottom. This was a lower low because it came after the February crash. And then after a massive time correction, which would set the low right in here, it had an explosion. The longer you correct through time, more often than not, the bigger the breakout or breakdown is going to be. The next higher low is here. None of these count because they weren't big enough, nor did they correct long enough through time. There was a decent sized one from here to here, but it recaptured it way too quick for me to consider that to be a higher low. We have now seen a big enough move to consider this to be whatever the next low is going to count, basically. It should be a higher low. This one doesn't count to me, and this one most certainly doesn't count. Now, those are two areas of resistance to look out for on the way down, but if you make a higher low, the key is to make a higher high, because if you come down and you don't, then that increases the chance you break down, and then you get signs of the longer term market turning over. And the lower you go, the harder it's going to be to make that of a higher high. Fibonacci right now, it's very low. 200-day moving average is very low. It's still in a nice little uptrend right now. But at the same point, because of the direction of all of these trends, it can still continue to go lower and still continue to remain bullish, because within this Fibonacci, the super long-term time frame, it's bearish holding above around 25. Yeah, 25. We're still bearish or bullish at 26, 27 based on this $8 low using the 61.8% Fibonacci within here. Now, which Fibonacci do you want to use? Do you want to use this low, this low, this low, this one, or this one? I would rather use this one and this one. That's what I'm going to do. That gives me Fibonacci levels roughly here at 39 and 33.61. 39 for this low, 33.61 for this one. Areas to expect support. So 39, I think, is going to be the massive level. I like the chances it has of holding it, but I don't like it greatly right now because I don't know the script and I don't know what the plan is. I know they stated when silver got up to this 48.50 barrier that it was bad news for JP Morgan, and now we see them covering their shorts. Or excuse me, they're doing something's going on. And this is also an area where if they can get the market lower, then this could give them an opportunity to really cover a lot of their shorts and save their butts a bit better. I don't know a lot of the way these things work, but I do realize that the market still could continue to head lower as well. All right, next one is the price memory. I was talking about this before. The prices are about 10% gap from each one. They represent the high, the low, and the close for each day. And I was stating that a move back to 39 would not be a surprise, or be just correct within that range again, because these things were lower too at the time. And if you look at the size of these, the size of these, and the size of these, this was the big correction back in January area. Then you have these two areas, and then this. It's not big enough. Well, it doesn't have to be. And finally, the quarterly chart. I don't see anything right now to disrupt this chart. And at the same point, if we do come back to find support, it's here. That would be scary.